We had a question about retained earnings, and I'm going to attempt to maybe try to clarify that a little bit with a simple example of a lemonade stand. One of the good things about retained earnings is that it does have a title that represents pretty accurately what the account is for. It is retained earnings. So let's look at this lemonade stand. A 10-year-old boy sets up a lemonade stand, and week one, he's going to close his books each week. We normally would do that on a quarterly basis or monthly or annually. So for week one, he has figured his revenues, in other words, all the money he's made selling lemonade, is $40. He's figured up his expenses, and those come to $25. So at the end of week one, he has a net income of $15. So what's this 10-year-old boy going to do with the net income? Well, he's got really two options here. So let's say he's going to take $10 of that, and he wants to go do something, spend money on his something. Say he wants to buy 2 baseballs, and so that comes to $10. That's really what that is a distribution of the $15 from the business to the owner, or in a corporation it would be owners. So really what this is in our terminology is a dividend. So he's distributed money to the investors in the business, or really it's to the ownership, for whatever use they want to make of it. In this case, he's buying a couple baseballs. So he's going to take the other $5 and he's going to basically just put it back into the business. He's not going to spend it. And so this would be pocket money, is what I would say. He's going to stick it in his pocket and keep it. It's going to be retained within the business. So it's retained earnings. And that is going to stay in this account. We're going to carry that forward. And let's go on to week 2 then. So week 2, he figures it up again. He's got $50 in revenue, $25 in expenses, so a net income of $25. So he's going to spend or give to himself, let's say $10 in a dividend. A dividend is basically just taking the earnings and distributing it to the ownership of the company. So he has $10 in a dividend. That means the other $15 is going to be retained in the business, and so it's retained earnings. And so you add that again. The account already had $5 in it, so it's got 15 more. So the retained earnings account is $20 at the end of 2 weeks. So basically, he's set aside of the money that he has actually made. When you subtract the expenses out, you can see he's had a net income of $40 if you go 15 and 25. So he's had a net income of $40. If he hadn't distributed any to himself, then he would have $40 in retained earnings. But he decided to distribute some to himself, which most 10-year-old boys would probably do. And so he's retained $20 of his $40 in earnings. So I hope that helps maybe explain it. Retained earnings is a fairly, well, because of the name, it does make a lot of sense. So if you have any questions, go ahead and post those in this discussion forum. Thanks a lot. I hope that helps.